myself. I'm from Zimbabwe, so obviously, buying crypto and trying to get onto exchanges is a major problem for us. So the beans I've got are the beans I need to grow. um, so with that in mind, I have a few questions. So the first question, I know you guys are heavily into Forex trading as well as crypto trading. So my first question has to deal with the sessions in Forex. Do they also pan out into the sessions in crypto?
Not specifically, no. So what you'll find is that in Forex you'll have sessions, right? But you have to understand that there's way more money that goes into Forex, right? So you've got
Oh,
institutions, banks, like for example, if you go to a company, right, and you're gonna go and exchange your Zimbabwe dollar into South African rands, right? They now have an excess of that money. So now they need to get
yeah.
rid of it so they can get back their money. So then they'll go into the markets and they'll trade that money back. And do you understand how much money that actually ends up being? Not even that, but you have
Yeah.
institutions, you have major companies like giving traders millions of dollars, if not
Yeah.
billions of dollars, to trade funds. So at the end of the day, there's more money going into Forex, right? So after saying
Yeah.
that, when you have like a London Open and you have like the New York Open or the Asian Open, there's a lot more money that gets pumped immediately into the market because people want to get their trades done with, right? Because
Yeah.
a lot of institutions they work like 9 to 5, so they have to trade in
Yeah.
the morning and then get their orders in, and then at 5 o'clock they'll take the orders out or they'll get other positions in. So normally, like the first hour or two of a session is going to be the most moving, and then that last hour or the last half an hour of a session will move the most. So that's why we don't see as much movement in crypto sessions because like when the New York exchange opens, there's no institutions really trading crypto. It's mainly just whales. And if an institution's trading crypto, they're not trading it, they're buying long term. They're investing in it. So that's why we don't see that massive movement. And then also what you'll find is that most of the time when you see big moves, it's at an odd time. It's at a random time of the day. Um, Most of the time it'll maybe be during Asian session because someone just bought a ton of it or someone just sold a ton of it. Some random guy that had like a ton of coins when that coin dropped, he just decided I want to take all my money out and now that coin dumps. So no, you won't really find that the sessions overlap.
Okay.
Cool.
Cool. Now you talk about pips in Forex. What is the equivalent in crypto, or do we sort of talk in pips in crypto as like to the fourth decimal place or something like that? Or
Okay, I'm just gonna
what do you
stream my
think?
screen here real quick, and then I will
Yeah.
explain it to you real quick.
Okay.
Let me also just swap this recording over from Discord to my trading view, and then we can go.
Okay. Cool.
Okay, so in I'm gonna go for Forex first, right? So in Forex, you have something called pips, right?
Yeah.
So if I take my ruler right now and I drag this from where it is and I move it up, right, you'll see actually, yeah, you'll see two numbers here. You'll see like a 5.2
Okay. How
and
do
you'll
I
see
see your screen? Where? Sorry. Where do I click? Do I click on you or?
click on me, yeah, I'm streaming live, yeah.
Okay. I can't see. Okay. Okay. Right. Yeah. Okay. Carry on.
Okay, cool. Um so you'll find that like okay, let me do this again. So I'm on a forex pair right now. So I'm gonna drag this ruler from here and I'm just gonna drag it up to here, right? So you'll see over here it says 0.07%, right? But then it says
Yeah.
7.4, right? That 7.4 is
Okay.
the amount of pips that it is, right? So in
Okay.
Forex, we call it pips because like for example, if I zoom in really close here and I measure 1 pip, one
Hmm.
pip is going to be, sorry, zero point 0.1 pip. That's zero point 0.1 pip, right? Do you see how that is 0%? Right? So
Yeah.
the percentages doesn't go in enough into the zeros to give me a valid
Mm.
amount. So in Forex, one
Okay.
unit of measurement, right? So one unit of measurement is a pipette. So zero point 0.1 is one pipette. And then you can go up
Hmm.
to 1, which is 1 pip, and then you can go up
Hmm.
from there, right? And the reason why they measure it in pips is because it's one unit of how much this chart can move. So like in Forex, for example, if I go to gold, right? Okay, wait, let me do this rather. Yeah, now let me just stick to gold. If I do gold, you see that if I drag this, it counts pips faster, right? You see the numbers getting a lot bigger, a lot faster than what it was
Okay.
on the previous pair. It's because this moves these pips there's more increments in between each number, right? So, for example, this chart is trading at 18,050, right? Whereas this Euro USD chart is trading at $1.06, right? So, do you see how
Yes.
there's more amount to move with 18,050 than what there is with $1? So gold would move more. That's why we count in pips, right? And the equivalent to that in crypto would just be the percent, because crypto moves
Okay.
enough for you to track it through percent. So yeah, cool.
Okay. Cool. Um, institutional capital has come up on a lot of your chats, and I can assume that it is the sort of antithesis of the actual candles that then lead out to the breakout. So it's the opposite of that. But what I'm concerned about is when the gradual build up to a breakout happens, how do you still work out where that institutional candle is? And I have an example which you may want to go to on Algo on the 20th of January this year at 12 o'clock. If you go to that counter and
Oh, there's a
time,
lot of nonsense in this chart.
January 12 p.m. Yeah.
20th of Jan, right?
Oh, yeah.
Uh,
Maybe just you go on the 15-minute chart.
see.
Yeah, because you've got
Oh
to
yeah,
go
yeah.
back.
So I'm on the
Yeah,
5 minutes. Yeah. No wonder I was scrolling forever. I was in the 5 minutes. 20th of Jan. Where is that?
yeah.
That's December. Years Jan 14, 15, 16, and 20. So yeah, right. So somewhere here.
Okay. Yeah. So um, as you can see, yeah, there you
12
go. Now
o'clock
you've got a
there.
gradual sort of candle. Where's your order block there? Yeah,
Right. Okay.
the whole block.
So what happens here, right? Because I'm on the 15 minutes, right? So what happens here? Let me actually just. I'm gonna do this just so that I don't lose this place, right? So what happens over here is on the 15 minute. After this, let me play it out a little bit more, right? So you see this, right? In this area, there is no 15-minute order block. You won't be able to find it. It will be very difficult for you to find, right? Specifically if you're new to trading this strategy. But if I go to the higher time frames, like the 30-minute, there it is, right? That bullish, bearish,
Okay.
bullish candle before
Okay.
the expansion. So if you're looking at a trading range like this, like an accumulation,
Mhm.
and you don't see the institutional candle or the order block in that time frame, go to a higher time frame. You will see it.
Okay.
Cool.
Right. Cool. Okay. When would you consider ever trading a non-impulse wave?
What do you
I
mean by impulse
suppose.
wave?
Well, I'm talking about, I suppose, the big waves, on an uptrend, you've got your big long waves, then you've got a slight retracement. And I suppose, in essence, every reversal in a certain way is like a retracement anyway. So, I mean, would you trade those shorter waves within the uptrend?
Yes, but it depends on the time frame. So, for example, if I break it down like this, right? So let me go to, yeah, I'm gonna stick to this Bitcoin chart. So do you see how we have this down move and then kind of like a little bit of an uptrend over here, then another down move, then another uptrend over there, right?
Okay.
Then another down move. Now we're consolidating. So you're asking me, would I ever trade this uptrend in this massive down move?
Yeah.
Yes, okay. So it all depends on the time frame. So for example, if we have a 4 hour downtrend, right? The uptrend that happens, the retracement that happens off the 4 hour expansion to the downside is going to last a couple days, right? This
Mhm.
consolidation or this uptrend lasted about 4 days, right?
Mhm.
So as long as I know that the higher time frame bias is down, right? I will not be taking a long from here and targeting these highs because that's
No.
just not smart, right? So you need to understand that this chart, when you're on the 4 hour, you have to mark off your resistance levels, right? Or your possible retracement levels, which I have over here. This is an institutional candle over here, and order block is sitting here. So I know that if I want to go long on any time frame that's lower than the 4 hour, my target will have to always be here. It doesn't matter if I'm going long here or if I'm going long here. This is the target that I'll always be sitting with. I can't go higher than this. But after saying that, I'm gonna do replay just to there. If I go down to the 15 minute, right? Now I'm in a shorter time frame view of this entire uptrend, and I see a good setup. Like for example, let me see if I see a good setup. There wasn't really one here. Like this entire area here didn't give me any setups. There was just consolidation, right? But yes, I would trade a uptrend in a downtrending move, right? So an example of that, I'll quickly give you an example just so that we have one. So here, right, I'm long ape, right? On the 15-minute, I'm long ape. But if I go to the 4-hour, we are downtrending, right? We are downtrending on the 4-hour, and I know that this area here is going to give us some resistance, right? And I also know that there's a lot of people going short off of this level here, creating a buildup of stop losses. And if the market takes that out, we'll probably tap into this upper zone here. And if I go to the 15-minute off of this, you can also see we are making higher highs, right? So going up with the trend of the market, trying to push up, yes, I'm currently trading the up move in this massive 4-hour down move.
Okay.
Cool.
Did the graph go through your stop loss, or did you wait for... Let's just discuss this trade very quickly.
Yeah.
Did you blast through your demand zone there?
Yeah. So what happened here was we had this area here. There was this nice indecision candle. It was a doji candle before the massive expansion, right? Before we broke structure to the upside. So what happened was we came down, but this candle never closed below this zone. It closed inside the zone, right? Then we had a big push to the upside, and I got home around here. I got home while this candle was printing, and I thought, you know what? I can actually go long here. So I went long, stop loss underneath my zones because it's still a valid zone. Then what ended up happening was I went to break even very quickly. So I'm currently on break even with this trade because I entered late. I went to break even quickly. Right, as soon as I went into profit, I was at break even. Because if we come down, I can get another entry.
Yeah.
Cool.
Perfect. How far back can order blocks dictate a current price? I mean, like, and I suppose it has to do with time frame, but I mean, like for example, that algo thing, I was looking back to the 21st of or 21st of January, you know. So I don't know. Is there, I mean, how far have you ever gone back for an order block?
Monthly.
Yeah.
Monthly time frame.
Is that,
Like yeah, like if I go to this chart over here, gold. This is one that I actually have. There's this monthly zone here. Where was it? Was it here? Wait, no, it wasn't a monthly. It was a weekly zone. You can go up to the months. You can go up to like the years. Yep, yeah. So this is a weekly time frame for gold right now. My zone was
Okay.
there on the weekly time frame, and we tapped it 3 times, and then we went up. So we can look. I took a long position here somewhere. I didn't hold it up till the top, but I did take a long position.
Okay.
So yeah.
Fantastic.
All order blocks are always valid unless they have been completely mitigated. So unless
Yeah.
price
And
taps
can
and
you
breaks.
yeah, and closes but over, or
Yeah, closes beneath the zone.
yeah,
That's when
so
it's
you're looking
completely
for a
invalid.
close, and a wick doesn't really count, does it?
Sometimes no, but in crypto, no. It never counts in crypto. So wicks don't count in crypto because of the manipulation. That is, it's so easy to manipulate price in crypto. You can easily have a wick just to grab some extra stop losses, and then price can just reverse. Whereas in Forex, I would take it that if there's a wick, I would kind of not want to trade that order block anymore, just because there's less manipulation in Forex, and there's less chance of that wick actually like going up and then not continuing up. You know what I mean?
Okay.
Or like, yeah.
Okay. What do you do when a change of character, how do you say it?
Chalk. Yeah, chalk.
Chock, flips to another chock. Pretty much like, I suppose, that diagram you gave us yesterday. You know, you've had a good uptrend. You've now got the chock, and it flips down, but you get another chock on the other side.
So like this, right? So if this chart went up, you have another chalk on the top side.
So you got a chock. Yeah,
Yeah, so
exactly.
there,
Yeah,
and it
that's
goes up,
exactly
right?
there. Yeah.
Okay.
Yeah.
So the best way that you would kind of look at this is that on the 15-minute, yes, this was a change of character. But if I zoom out again, right, this wasn't a 1 hour change of character. The 1 hour change of character would be kind of down here. Right, so on that time frame, on the time frame of the 15 minutes, this was a change of character, yes. And if this price decides to go up and break up, this is a break of structure because it is still uptrending on the higher time frame.
Yeah.
Right, so we have on the 15 minute, this is a change of character, yes, valid, but the 1 hour change of character is only down here. So this is just the lower time frame confirmation that this might still go down. But on the higher time frame, yes, I do understand we are uptrending and I am trying to catch a reversal in an uptrending move. So that's exactly what can happen and it will happen sometimes. Yeah.
Hence the green there in your order block there.
Yeah. I'm waiting for price to come into here and show me signs of weakness. So make a 1 minute chock. Then I can enter.
Okay. Okay, and then you'll enter down. Okay.
Yeah.
Cool. Scalping versus day trading with regards to smart money concepts.
Okay, so
Scalping versus day trading.
what do you define as scalping?
Yeah, I don't know. I mean, I'm just trying to take a quick, on a low time frame of around 15 minutes, and I'm getting in and out at a high leverage.
Okay, so you're talking about crypto, right?
Oh, sorry, and this is crypto.
Okay, cool. So scalping on lower time frames, right? Scalping for me is going to be 5 minutes and lower, right? 15 minutes is day trading for me. Because if, for example, I took this 15-minute trade here, this can only clear like tomorrow. Like this doesn't have to clear today. Like this can take a while to get up. So scalping for me is kind of like if this was on the 3 minutes, and now I'm like, okay, cool. I wanna I'm not gonna delete it. But let's say, okay, cool. Now I'm scalping this chart, and I'm like, okay, cool. We made a break of structure here, right? Now we come back down into my zone. We close above it on the 3 minute chart, and I decide, okay, cool. I'm gonna go long here, right? You need to understand that if you're scalping and you want to get in and out of the market really quickly, you can't have insane targets. You got to just target the next high or the next low, right? So vice versa, over here, we had this zone here. Price taps the zone. You could say, cool, go long, stop loss below the wick. Then I'm targeting the previous high, right? Do you see how this is still a 6-to-1? But it's just a tighter zone, right? You're going to be trading on a lower time frame, and this trade clears in 3, 6, 9, 12, 15, 18, 21 minutes.
So I suppose the narrowing down of the order block can enable your returns to go sky high. That would favor scalping.
Yeah, but the only thing you need to understand is you can't be scalping longs in a downtrend, for example. Right, so for example, if the 15 minute is actually going up here, so the 15 minutes trending up, you have to have a good 15-minute time frame bias to understand that if there is a channel here, if this channel breaks, it can come down to here. Right, so when you're scalping, you can't have these massive stop losses, and you need to sit properly on your stop losses. You can't be on the 3-minute scalping, and then you decide to take this long over here, and then all of a sudden price drops the zone, and you're like, no, there's another zone down here. I can move my stop loss down. No, that you can't do that. Then your trade becomes a 1-to-1. You have to sit there, wait for your stop loss. If your stop loss gets taken, you got to wait for another trade. You got to wait for it to come down to the next zone and enter another position. Right? That's a trigger for me.
Do you need to make a trade?
I just want to check the chart out.
No problem.
Which one is that, Dudley?
It's Euro USD.
I'll keep an eye.
Cool, yeah. Dixie made a low. It's printing downwards now. Oh, that's bleak. No, I'm not in. But that's bleak. Anyways, I'm pretty sure the Dixie might actually reverse, eh? Because there is this zone here.
So that's good, eh? That's a good sign for crypto, isn't it?
Yeah. Dixie coming down, yeah. But it might actually go up here. I've got a feeling.
Okay.
But yeah, next question. Go. Keep me going.
Right. So I suppose, how you look at OBs on a daily or a 2-day or even a weekly and drilling down, you could be drilling up again just to find those institutional candles, aren't you?
Yeah. Literally every single Monday or Sunday, I go in and I work my way down from basically the daily time frame. Start on the daily, go down to the 4-hour, go down to the 2-hour, go down to the 1-hour. Mark off all my zones. Like mark off every single zone that can be valid for that week. Like for example, if I'm on the daily, I'm not going to be marking off like. Okay, you can even see how far I got up with the daily. There's a zone up there. There's zones down here on the daily over here. There's zones down here, and these zones will stay here until they get tapped into. Like I didn't even know this zone was here because I was on a lower time frame. But if I'm on a low time frame and all of a sudden price is coming down, I'm like, oh wait, there's a zone here. Then I'm like, okay, cool. It
Pay
must be a
attention.
higher time frame zone. Yeah. So it's kind of how it
Okay.
works.
And you're unmitigating zone. I mean, you're undoing your green markers when you've seen it mitigate. Eh?
Yeah. Yeah. Every time it
Okay.
pushes through, I'll delete the zone.
Okay. Talk about sizing your trade because obviously yesterday you said don't risk more than a certain percentage, 0.5% to 1%. So can we just, and I think this is just to reiterate my views and other people's views on how sizing your trade will save you in the long run. How do you do it?
Like managing risk, are you talking about?
Well, yeah, I suppose it's also, you know, you might have a situation where you are targeting a certain stop loss and that becomes like 10, 12% just based on maybe the volatility or it's the type of low cap coin that you're chasing. So you're now forced into an issue where you are. So you then need to understand that your stop loss is so much bigger, you have to resize your trade, don't you?
Yeah. Yeah. So a good example that I can give. Actually, wait, Renando, do you mind just keeping an eye on
Yes.
the charts for me right now?
Yeah.
Yeah, okay,
Sure.
cool. AJ, just a quick one. You see how I didn't react on the zone? Just
Yeah.
because I was waiting for a reaction to actually go to the upside. There was no buying pressure, so this completely just pushed through the zone. So therefore, I didn't take a trade, right? It's
That's
all about waiting.
mitigated it.
Yeah, it's all about waiting.
Oh, okay.
So you're talking
Cool.
about,
That's such a good example. I'm glad. Mm.
yeah. So like there was a zone here. There's a 15-minute zone here. You can see there. But you see, price just pushed straight through it. Because I was trying to wait for a confirmation that there was actually buying pressure in the market. Otherwise, the stop loss will just get taken every single time. Right? You have to wait for that
Exactly.
extra confirmation. Okay, so resizing trades and taking trades, right? So I'm going to go to this, and I'm actually going to draw a nice diagram out for everyone that is watching this on replay or whatever. So, whoa, delete that as well. So, long story short, if you have, give me an account size real quick. $100, $200,
Say for
5,000,
$200. I've got
$200.
$200.
Okay, $200. So let's say your account's $200, right? You need to work out for you personally what is the best amount that you want to risk per trade, right? So, for example, you could say, I want to risk 10% per trade, right? So that could be the amount that you want to risk. Or you might say, okay, no, $20 to risk on a $200 account is too much for me. Then you say, okay, cool, let me risk 5% per trade, right? You don't risk in money. You don't risk in money. You risk in percentage, right? So you risk 5% per trade. Let's just say that's going to now be valid for you because you're starting out and you want to risk 5%. That's $10 per trade, right? So you're risking $10 per trade now. But now let's say you find a position or you find a trade that isn't actually a trade that you feel too confident about, but your setup tells you that it should go up, right? Or let's say news is coming out in a few hours, but there's a setup that you want to take, but you don't want to risk the full $10 because you might actually lose the trade because of news, right? So that happens to a lot of people. That happens to me as well. So that's why I always recommend people having two risk amounts, right? So you have a 5% and you have a 2.5% risk, right? So if you were trading with a 10% risk, you would have a 10% and a 5% risk, right? So now you have the option to either risk $10 or you can risk $5, right? So now you can then say on your trades that you don't feel very confident about, you can risk $5. But the trades that you feel confident about, you can risk $10. But you cannot risk more than that, right? If you risk more than that, you're not listening to yourself and you're not managing your own risk and you're going to choose to lose the trade basically, right? So now you know, okay, cool, I can risk $10 or $5. When is the next point of which you start risking more, right? So for example, if you win a trade and your account has now bumped up to $250, you will not risk 5% of 250. No, you will still risk 5% of your starting balance, which was $200.
Okay.
Right? So
Hartley,
do you, yeah?
Dixie is rejecting 10-minute OB.
Leon.
Okay. Just keep an eye on the charts for me, please. Got a feeling Euro USD might be a trade setup.
Yes. Yes, definitely.
Go for it.
Just let me know if you take anything, and I'll probably take it with you.
I'd
Okay.
like to-
So like I was saying, with the S&P 500, this is gonna be like a it's like a double trade. People came in for knowledge, now they're getting live trading as well.
Oh, exactly.
Where was this? Oh, yeah. So like I was saying, you cannot risk you can't compound the trade, right? So now you have 250. You can't risk 5% of 250. You are still risking 5% of 200.
We can go from there. So my
Yeah.
next question to you is, coming from Zim, I mean, in your mind, where are the best exchanges to try and target? Because I mean, like, okay, crypto, I mean, everything that I've tried is starting to pick up that I'm from Zim. If it's not picked up my VPN, then it picks up my card. I'm just wondering where else to target to get. You've seen me talk to you about this very problem.
So you're saying like what exchange would I recommend if you are in Zim and you're trying to stall trade?
From a shitpot country, yes. Yeah.
Shit. See, like I can't give that information out because it would be highly illegal for me to tell you do this because it's breaking the law.
Yeah.
But to be honest with you, if what you just said now is like you get into a point where you can't like make an account because it's telling you, oh no, you're from Zim, or you're trading and you deposit money and you're like, oh no, you're from Zim, and it's also picking up your VPN, I don't know what else you can do. Because at that point in time, it's like there is no other option other than creating a Forex account that allows you to trade crypto. Because then, because if the exchange is telling you no, you can't trade crypto in Zim, and you find a Forex account that allows you to trade crypto in Zim, then it's the Forex broker, then it's the brokerage that allowed you to trade its fault. So it's their fault that they're allowing you to trade it in your country. You know what I mean? So you can try that maybe.
Stop screening and let me, and if I can screen on.
You can stream. You can go. You just go at the bottom
Okay,
there,
how
share
do I,
screen.
okay, right. So, okay.
There's a button. Oh wait, did you find it? I can.
Saw it. Yeah.
Cool. Then you can just do a stream share, and then because the thing is, I can stream and you can stream at the same time. Both of us can watch each other's streams.
You see my screen?
No. What I'm gonna do quickly is I'm just gonna stream Discord to you.
Okay.
So check here. You just come down here, and you see this button here that says share screen. If you click on that, there should be a button here that says like choose a window or something,
Okay.
and then this will come up.
Yeah. Okay.
Cool.
Okay. Something did come up. Right. Hold on. Okay.
Cool.
Trading view. Yeah.
Fernando. Okay. I'm not targeting the 5-minute lows anymore. I'm targeting 105774 because there's liquidity buildup. And it's going to be a kind of a longer term position, medium term position, probably for the whole week maybe. But we'll see. We'll see. That's the target I'm going for. I'm going to see how it plays out. I'll let you know when I do clear like 50% off as well.
Okay, I'm having difficulty.
That's not a problem.
Just check.
You can chill. I'm not going to cut you off at like 4 p.m. on the dot. It's chilled. You can.
No.
You can,
No,
you can go.
I think we've given these guys a lot to think about.
Yeah, that's a digest.
I think it was one of the trades. If I can just look at it, and maybe I can tell you where to go. Okay. So it was algo. Well, was it algo? It might not be. Hold on. Just check. Oh, it is algo. If we go to the current price, I'll tell you where I had my order blocks, and maybe you can find an order block for us in relation to proving why this guy said he would long from here. So I had my order block on algo on the 1 hour. I'm through at 0.2175 at the top and 0.2164 at the bottom.
Wait, well, algo 0.21.
76.
7. 6. So it's what? So it's here.
0.2176. Yeah, somewhere. It's below the current price stuff, and I know it's gone off on a tangent.
Wait,
So,
it's below current price. Oh, so you marked off this zone here. Okay.
yeah. Can you find me another order block that would have confirmed that that was indeed where that resistance of the previous or the second previous big dump happened, and go further back, basically towards my date of 21 January, to find me the order block that confirm, or would it have come off this swing on the 3rd of March? You know, I mean the low on the 23rd of March. Where would the order block come in on this to have confirmed that that indeed was the place to go low? Because it does look like it's really tested with a lot of wicks down there on the 1 hour into some zone that I have yet to mark.
Okay, so you marked off this zone here. Right, I'll just
Let
look
me
at my
just
screen
check
real
your
quick.
screen.
Yeah.
Yeah.
So you marked off this 1 hour zone here.
But I marked below, and I
Yeah.
refined it to sort of below 50%. Yeah.
How did you get here?
I worked back, way back to the 21st of January, and I found an institutional candle. Yeah, that's sort of where I was.
Right,
Just
so you
check that
found
out.
this
What date
candle.
is that?
This is
Yeah.
the 23rd, roundabout.
Okay.
Yeah.
Yeah.
Right,
May have
so
gone lower. May have gone lower. I don't know. Yeah.
okay, so this was the institutional candle that we had before we broke
Right.
structure to the upside. So that's why this is a valid candle, and that's why price is rejecting off of it. Right?
Okay.
So
Okay.
as soon as you have an institutional candle before a break of structure or a change of character, it is going to be valid. That's the institutional candle you'd use. Yeah.
Okay.
So that would have been the confirmation.
Okay. Thank you very much. You've made it as simple as possible, and for a cattle farmer from Zimbabwe, I managed to understand everything, and I hope that this can go out to everybody else, and they see the benefits of these questions. And I really want to thank you guys, and thank you, Waz, for the opportunity. And if you're not a VIP member yet, and this is going out to non-VIP members, I don't know, but I strongly suggest to either recommend to your friends who aren't VIP members to become VIP members, or become one yourself. So thank you to you guys, and I look forward to checking you on the next stream.
Cool. Okay, thanks. Just a quick one. Just a quick one. The questions you just asked me, you can come to me with those questions in the VIP mentoring sessions. You know that, right?
Yes.
Okay, just needed to make sure that you can ask me those questions. If you ever have more questions, just come to me in those sessions. You don't have to
Yes.
win a one-on-one. Okay, I just need to make sure that you knew that.
No, it was like I had quite a hectic schedule, so I just literally brainstormed 15 questions, and I thought that, and yeah, we've sort of got there with that.
Cool, now that's perfect then. Sweet, brother.